Today, gold, inflation, and deflation with Peter Schiff. Hello again, it's Martin North from Digital Finance Analytics, world's latest post covering finance and property news with a distinctively Australian flavour. Today, I'm joined by Peter Schiff, an American stockbroker, financial commentator, radio personality, author, and I guess a leading gold bug. He's the chief global strategist of Euro Pacific Capital and has got a significant following on YouTube and other social media channels. Peter, welcome to Digital Finance Analytics.
Oh, it's my pleasure. Thanks for having me on your program.
Well, I really appreciate your time today. This is such a critical time for investors around the world trying to understand what's going on. We've got the US markets, pretty much back to where they were. My question to you first, Peter, is are the markets overvalued?
Well, absolutely. I mean, the US market is a bubble. So it's not just overvalued. The valuations are extreme. So the bear market that's going to follow this bubble when it pops is going to be particularly vicious. The problem is it may be harder to detect the magnitude of the decline if you're measuring it in US dollars. But if you're measuring it, let's say in Australian dollars, that's where you'll see a much bigger decline. Of course, the biggest decline of all will be if you're pricing US stocks in terms of real money, which would be gold. And I would expect to see major U.S. stock markets lose 80 to 90% of their value from here if you price them in gold.
Right. So obviously, understanding where we are is important. Understanding where we come from helps to explain where we may be going. And of course, the Fed has been pumping liquidity in like you wouldn't believe there's any tomorrow, right? And they've been doing it for a long, long time. This isn't just the virus related, is it? There's a structural question as to whether the Fed is actually just blowing the bubble higher.
Yeah, well, providing liquidity is a nice way of saying it. What they're doing is they're creating inflation. They're just inflating. They're monetizing government debt, and they're buying assets with the money that they create out of thin air. And the goal is to prop up those asset prices, but also to enable massive U.S. government spending. In fact, the U.S. government is spending more money that the Fed prints than it collects in taxes. And so we're trying to keep this whole pyramid from collapsing, but eventually, it's going to happen. And the fact that they delay the day of reckoning with this policy just means that when that day arrives, we have a lot more to reckon with, and so it's a much bigger crisis than would have been the case, had we faced the music years ago.
And of course, it's not just the Fed, but central banks around the world are following suit. Here in Australia, the RBA took their rates to 0.1% last week and announced a quantitative easing program. We've got the same going on, of course, in Japan and in the Eurozone and in the UK. So everybody's just going down the same path.
Right, but I think they're following the Fed's lead because everybody is afraid of having normal interest rates because nobody wants their currency to appreciate, which seems counterintuitive because a strong currency is a good thing. It means that your wages have more value, your savings have more value. You can buy more stuff for less money. You have a rising standard of living. But modern day central bankers, for some reason, have no common sense, and they think that weakness is strength. But eventually, when consumer prices really start to rise, the public around the world is going to be, protesting the rise in the cost of living. And so interest rates are going to eventually rise, and they're probably going to rise much higher than they ever would have gone had the central banks not gotten so far behind the curve. But the countries that have the most amount of debts are going to be the ones that are least likely or able to raise rates. And so inflation is going to just ravage those economies.
And if I think about that liquidity that's been created, a lot of it's flowed back into the stock markets and into bond purchases and those sorts of things. So it's not necessarily hitting the real economy directly.
Well, it's not only not hitting the economy, it's draining the economy of capital. The reason we don't have real economic growth is because capital is being diverted from Main Street to Wall Street. So if we want real economic growth, we need more savings so that we can have more legitimate capital investment. But we're not going to get more savings until we have higher interest rates. But the Federal Reserve is actually discouraging people from saving, as are central banks around the world. And they're encouraging reckless debt, which just fuels asset bubbles and consumption, all of which undermines real economic growth.
And interestingly here, the Reserve Bank governors several times said people have to move into the market, take market risk if they want any sort of returns.
I know, but first of all, you're distorting the markets by causing all this money to artificially bid up prices. But in the end, the losses are going to be horrific. To say that, well, people have no choice but to take risk, I think they do have a choice. I don't think they have to buy overpriced stocks. Now, fortunately, if you look around the world, there are stocks that are not overpriced. I mean, I find that there is still a lot of value in the markets if you spend the time to look for it. So you can buy companies at reasonable or actually cheap prices now and get good dividend yields. But also, I think gold and silver are still very cheap relative to the amount of fiat currency that's been created. And I think there's a lot of opportunities in the mining sector. I think a lot of these stocks are going to be raising dividends significantly over the years. I think their cash flows are going to improve dramatically as the price of gold rises much faster than the cost of producing it. Australia will be a main beneficiary of the remonetization of gold because there's a lot of gold in the ground to be mined and other resources. I think you're going to see a boom in natural resources. All sorts of minerals that Australia has in abundance are going to be in demand. And so the economy is going to pick up. But I particularly think that the Chinese are going to be even better customers in the future than they were in the past. I mean, once they stop wasting their money on U.S. treasuries and U.S. mortgages, and the Chinese consumers actually start to spend more of what they produce as opposed to loaning it to Americans, you're going to see major demand for raw materials in China. And I think trade is going to increase dramatically between Australia and China, as trade is diminished with the United States. So I think both Australia and China will trade less with the United States, but they'll end up trading more with each other.
Let me just come back to gold for a second, because obviously a number of central banks around the world have been acquiring gold. And in fact, many other people, even in some Asian countries particularly. What do you think is there a sort of a drift away from the US dollar?
Well, absolutely. I mean, right now it's a drift, but it's going to gather momentum. I mean, the smart central banks are buying. But what I think we are headed for is a remonetization of gold. The U.S. took the world off the gold standard with Bretton Woods. But then we broke our commitment to the world in 1971 by defaulting on gold backing. The U.S. dollar never would have been accepted as the world reserve currency, but for its convertibility into gold. That's what made the dollar as good as gold. So I think the next step, now that we have so massively abused the privilege that the world has given us, I think the next step is for the world to go off the dollar standard and back to the gold standard, which is the standard it was on prior to Bretton Woods, because currencies need to be backed by something. So when currencies were backed by gold, they were backed by something real. When currencies that were backed by the dollar that was backed by gold, they were still backed by something real. Through the dollar, the world was still on the gold standard. But now you have currencies backed by dollars that are backed by nothing. So if you back your currency with something that's backed by nothing, then you've got no backing to your currency. And this is the problem with the modern monetary system, is there's no real anchor. There's no real value to the money. And so it can just be created at will. And you have the potential for a loss of confidence, which is where we're headed. So I think the world remonetizes gold. And in order to do that, the price of gold is going to have to rise substantially from its current levels. Otherwise, the only way it's possible is if the price of everything else collapses. And I think that's less likely than the price of gold rising to where it would need to be given the current level of prices for other assets and consumer goods.
Right, and you, I think, have expressed a view that it could be $5,000.
Well, no, I think it'd be a lot higher than that.
Okay.
It more like 10 to 20,000, and of course it's a moving target because it depends on when the remonetization occurs. Because between now and then, a lot more fiat currency can be created, and so really, what gold is doing, gold's not going up. It's just letting you know how much value all these fiat currencies are losing, and so the more they print, right, the more unit of each currency would then be required to buy an ounce of gold, because the global supply of gold doesn't really change very much. I mean, it grows slightly on a year over year basis, but money supply can just grow exponentially. So if they just keep printing more money, well, that doesn't mean there's any more gold. So now all that gold just has to, go to more and more money. And so the price of gold just has to go up for the market to clear.
Yeah, yes, absolutely. I understand that relationship. Now, one of the things that I think is quite interesting is at Jackson Hole, not last year, but the year before, Mark Carney made the point that the dollar, the reserve currency, may not be forever. And he actually posited that perhaps a digital alternative to the dollar would be an interesting way to explore. And I know that there are some experiments going on around the world with, digital central bank digital currencies. How do you think that fits into the jigsaw?
Well, I mean, I think it serves the interest of government to get rid of cash, because the government doesn't like it when you use cash, because it can't monitor those transactions. So it doesn't really know what's going on. And so to the extent that government likes to spy on its citizens, it can't spy on their cash transactions. But I think that is a good thing. We want to have a certain level of freedom. And if we surrender all of our privacy, government could become very corrupt. And it's one thing if you think, we have a law-abiding government, they would never abuse all that power. But the minute you give them that power, it's the government that becomes the lawbreaker. And then anybody that opposes that, if you're a freedom fighter, well, you become a terrorist. So I don't like the idea of having no cash. And also, to the extent that they try negative interest rates, at least if you have cash, well, you could take the cash home and put it under your mattress and not have to pay the negative interest rates. But if you have no cash alternative, if you have to keep all your money digitally, well, they could just start subtracting from your balance, until you do what they want. So I don't like the concept of a digital fiat currency. It's not an improvement over what we have now. The only improvement would be a digital currency backed by gold. Well, then that would be something that I could get behind. That would be what we used to have. We used to have paper currency backed by gold. So digital currency backed by gold would be more efficient. But again, I don't like the government prying into all of our transactions. I think that ultimately that has the potential to result in rather, dramatic tyranny or oppressive governments that will ultimately arise.
Yeah, well, of course, that is the real issue, isn't it? The centralized control, and you look at China and some of the things that are going on there with, the credit score, but also the personal social score as well, and in some cases, people being disabled from doing things.
Yeah.
Now, one other question with regard to other asset classes. What about US bonds and I guess, government bonds around the world? In this world that you're portraying where gold becomes ever more critical, presumably bonds become less critical.
Well, U.S. government bonds, are, as far as I'm concerned, they're practically worthless.
Right.
I mean, if the dollar is going to crash, well, then bonds are going to crash along with them, because bonds are simply future payments of dollars. And so people will lose even more money in U.S. treasuries than U.S. currency, because when you have a U.S. treasury, let's say it's a 10-year maturity, you have to wait 10 years to get your money. Well, the dollar can lose a lot of value while you're waiting. And of course, if you have a 30-year treasury, well, 30 years, the dollar may have no value at all 30 years from now. So I think the losses in the bond market will be horrific. But, it's not just treasuries. It's any debt instrument that is denominated in dollars. Inflation is going to wipe that out. I mean, not only is inflation a tax, but it's a transfer of wealth from creditors to debtors. So the people that have borrowed in dollars are going to have their loans forgiven. but the people who have loaned in dollars are not going to get repaid. I mean, they may get repaid in dollars, but they're not going to be repaid in purchasing power. If you get money back that doesn't buy anything, that's the same thing as not getting any money back at all. I mean, people, look at the default risk and they think, oh, the U.S. Treasury, they're not going to default because they could just print the money. Exactly. If they print the money and they give you money and it doesn't buy anything, how is that any different from a default? It's just not as honest, but the effect is the same on the holder of the note. They can't buy anything with their interest payments or their principal. So, if you're listening to this interview and if you own any U.S. dollar denominated debt, get rid of it now while there's still someone dumb enough to buy it. You don't want to get caught holding it when the music stops. I don't think any bonds are necessarily safe because I think all bonds are overpriced because their yields are too low relative to the inflation that's going to take place. I just think the U.S. bonds are particularly vulnerable, but I would rather buy equities that pay dividends than bonds that have a low coupon. So there's a lot of, as I said earlier, there's a lot of good stocks. Some of them are in Australia. I mean, I own quite a few Australian stocks, but all around the world, I'm investing personally. And for my clients at Europe Pacific Asset Management, we have quite a few Australian clients and clients down New Zealand and all over the world who have entrusted money with me to manage it and pick these stocks. I think in particular, a lot of the emerging markets in Southeast Asia, maybe even some in Latin America, will benefit dramatically from the collapse of the dollar because the overvalued dollar has been a big problem for their economies. And a falling dollar is going to provide a lot of relief because these economies have borne a disproportionate share of the burden of supporting the U.S. dollar. And so when they're relieved of that burden, I think it's going to result in tremendous economic gains in those economies and the value of the assets there and their currencies.
Yeah, very interesting. And what about property? In Australia, property has become almost the go-to investment class. We've got very high household debt. We've got very high house prices. But people are still thinking that the government's going to support the housing sector. And in fact, we're seeing house prices that fell a bit beginning to shape the other way now because of all the liquidity and all the support from the government here. What's your perspective on property, therefore?
Yeah, well, no question that Australia has experienced a property bubble, residential property. Anytime you have interest rates artificially manipulated, when you're holding interest rates down, well, then you're propping house prices up. Because when people buy house prices, since most people buy a house with a mortgage, they borrow the money to buy it, the cheaper they can borrow the money, the more they can pay for the house. Because when they shop for a house, they look at the payment, the monthly payment, more than the actual price of the house. So by keeping interest rates artificially low, home prices are artificially high. So eventually that's going to come to an end. And so, I would not be buying residential real estate in Australia as an investment, for sure. I wouldn't buy it as a consumer unless I was prepared to lose quite a bit of money on the property over time. But, look, you buy a car, it's going to depreciate. You buy a boat, it's going to depreciate. So that doesn't mean you can't buy a house knowing it's going to depreciate. Just don't think you're going to get rich. You need to have money because a house is a money pit. It costs a lot of money to maintain a property. And you got to be prepared to see it go down. The only way I think property owners may make money is as debtors, because if there is a lot of inflation, then they end up repaying their mortgage with cheaper money. But in real terms, right, if you price a house in terms of an ounce of gold, house prices are going to collapse. So if you're smart, rent, and take the money that you would have spent on a house and buy yourself some gold or some other assets. And then at some point in the future, you'll be able to buy a lot of house with a smaller quantity of gold, much smaller probably.
Great advice. Well, what's interesting is that there's a huge spruiking operation going on. All of the mainstream media here, which is intrinsically connected to the property sector. They're all sort of trying to talk up property and saying, hey, great time to buy. Interest rates are really, really low. without really contextualizing what's going on. And frankly, the mainstream media here in Australia are pretty shocking. A lot of them are actually just spinning stories with no real truth. You've had some personal experience of that too.
Oh yeah, well, I mean, this is really unreal. That I was approached by a reporter associated with 60 Minutes and The Age, and of course, the reporter completely lied to my staff about the nature of the interview. They actually told me that they wanted to discuss my views on gold and inflation. So it was, to do that interview that I even allowed them to come into my home with the cameraman that they hired. So they conned me into consenting to an interview totally based on fraud, under false pretense. So they never even had my permission to discuss the bank that I have an ownership interest in. But then they proceeded to tell one lie after another. I mean, it's amazing. There is not a kernel of truth to their entire broadcast. The entire thing was a work of fiction. They tried to accuse me of masterminding some kind of global tax avoidance, money laundering scheme, that I'm enabling drug traffickers and organized criminals from my tiny little bank in Australia, in Puerto Rico, that barely has any Australian customers, who barely have more than $1 million collectively on deposit with my bank. We're not banking any of these notorious criminals. In fact, my bank is probably one of the most compliant banks. Talk to any of our customers, look at our reviews. The only bad reviews we have are because we close accounts. I mean, we are probably one of the strictest banks in the world when it comes to money laundering and how difficult it is to actually maintain an account with us. We close more accounts every year than we open. I mean, my compliance department is rigorous. I mean, more than half of the bank's employees work in the compliance department. It's our most expensive, department, and nothing gets through. So, we're not under investigation. I've never been contacted by any government in Australia, anywhere else, to say, hey, we think you guys are involved. I mean, they made believe like this entire investigation, this Operation Atlantis, the J5, that somehow it's centered on my bank. That's pure fiction. I mean, that would be a complete waste of money. If all these governments were spending all this money on my tiny little bank in Puerto Rico that has just we're a small bank, and we are so vigorous when it comes to compliance. Every single thing they said was wrong. I told them that. I tried to explain to them that what they were saying was wrong, that we don't market the bank as a tax haven. In fact, it's not even in a tax haven. It's in Puerto Rico. It's not a tax haven. It's the same as having an account in Florida or California or New York. It's the United States laws that are in effect. There's no banking secrecy in Puerto Rico at all. I mean, the whole thing is farcical. But they wanted to continue and tell these lies, and they knew that they were lies. And in fact, I've asked them, because I'm about to sue them, and I said, look, I'm going to sue you, but you can do two things. You can show me the proof that you have that anything that you said is true. And then, of course, if it's true, I won't sue you. Or you can apologize and retract the story. They're going to do neither. They don't want to apologize because they want to pretend that there's some truth to it. They don't want to have to admit that they're not really a news organization. But of course, they can't provide any proof that anything they said was true, because nothing they said was true, and there is no proof. So now I have to sue them, and who knows how many millions of dollars I'm going to have to come out of pocket just to cover the legal costs. Of course, I get them all back eventually when I win. But it's going to be a couple of years before I can clear my name. In the meantime, the Australian people are being conned by these guys. I think they basically sacrificed my reputation to advance their own political agenda. They're trying to get the Australians to accept more regulation, less individual freedom. They want all the accountants and the lawyers to start spying on their customers. They want even more regulations on the banks, supposedly because people dealt with me. Well, you know what? They dealt with me because I'm squeaky clean. I have one of the best reputations in the industry for rigorous compliance. I mean, I was operating in the Caribbean, even though I wasn't a tax haven. I still got painted with that brush. And so I had to be squeaky clean. I had to dot all my I's twice, cross all my T's. That's why it's so hard. I mean, getting an account at my bank is like getting into an Ivy League school. It's like, we turn down more people than we accept. But then most of the people, the minute they start using their account, we close it. If they do anything that's in the slightest bit suspicious, we have to shut them down. We can't take any chances. So this whole story couldn't have been more wrong. And the worst part about it is they know they're lying. And of course, to accuse me of being dishonest, when the only reason we had an interview was because they're the ones that lied to me. And then they edit the whole interview to make it look like I'm the guy that's trying to change the topic. I'm trying to stay on the topic that they asked me to interview. And of course, I answered a lot of their questions that they pretended I didn't answer. They just didn't show the answers. So they took that whole thing, they edited it like they were Frankenstein building a monster. They would take one part of one of my answers and add it to another part and then show that as an answer to a question that they didn't even ask. Or they'll show them asking a question, but then my response is to a different question. So they just tried to make me look as bad as possible. But even there, most people can see through the hatchet job. But imagine if you could see the entire interview. And by the way, other people that they interviewed contacted me to say they want to sue them, that they were taken out of context, that they didn't say what they're shown to be said. So none of it is real. It's like they were scripting a movie and they were trying to get what they wanted and nothing was real. Everything that you're looking at is pure fiction, right? It shouldn't even be able to be called news. It's like you went to a movie, right? And you're watching just a complete work of fiction where the characters, the lines have been scripted or it's but they're passing. The whole show should be off the air. Nobody should watch it. There should be a national boycott of those publications, The Age, 60 Minutes. I mean, the whole thing should be shut down. It is a fraud, not just on me, but on the entire nation is being duped into thinking that fake news is real.
Well, Peter, I understand exactly where you're coming from. And I would say from my analysis of their broad reporting on a range of property-related issues where they're frankly just spinning it left, right and centre. It's a really broad-based problem we have in Australia where, in fact, it's very hard for people to get, real comprehensive data and news to be able to make good decisions. There is so much spin going on. There is so much alignment to, agendas of control, agendas of just buy property all the time. But this is just a microcosm of a big problem we have in Australia. One reason why we have quite a few followers on our channel is that people want an independent and objective view of what's going on, because we're not getting it from our mainstream media.
No, not at all. I mean, certainly not from Channel 9. I mean, I'm hoping that I win the biggest defamation award in the history of Australia. I mean, I would like to put these people out of business because they have no right to be in business. I think they've completely violated whatever trust the Australian people might have had in them. But this, again, it's a fraud, not just on me. I'm collateral damage. The whole nation should be outraged at this fraud that is being perpetrated on. And I don't even know who the elected officials, because I think there's some corrupt politicians that are working with these reporters that are selectively leaking them some information and coordinating their legislative efforts with this fake news that's being put out by their lackeys in the press. So I think it's a whole corruption scam that I'm going to work my best to expose. So it's not just vindicating me and getting some financial relief for tremendous economic damages that have been imposed on me, but vindication for the country. So and maybe this can spark some legislation to clean this thing up because it's a complete mess.
Yeah, well, I can certainly underscore that. We know, for example, even some of the property data that should be available is being held back. We know that many of the indices that are being quoted broadly here in the mainstream media are actually very myopic in the way they report. So Australians are actually often being just misled simply because there's no real good source of truth.
Yeah, by the way, I recorded my own video in response to the 60 Minutes fake news story. Mm-hmm. And so if you go on YouTube, the title is 60 Minutes, Australia and the Age are fake news. And I've got over 120,000 views now on that. Not quite as many. I think the official one from 60 Minutes has about 275,000 views, but I've got about 9,500 likes and only about 200 dislikes. they've only got about 3,000 likes, but 6,000 dislikes. So they've got twice as many people don't like their video. Whereas with mine, there's hardly anybody that disliked it. And I have way more likes than they do, even though I have far fewer views. But if you watch that whole video, I completely expose the fraud behind that whole report. So you should watch it, and then, so you'll know that I'm completely an honest guy. But what will make you mad is how 60 Minutes took somebody who's completely honest like me, who has a great reputation in banking and who's never done anything wrong, and turned me into a villain, a complete villain. I'm like the biggest criminal in the history of the world, mastermind, the biggest tax avoidance, money laundering scheme the world has ever seen. And that's what how they presented me to their audience. Get the complete opposite of what I actually am. Well, all of it made up with absolutely not a shred of evidence behind it.
We'll put a link to that video. I think it's important people watch it. Peter, last question for today is your debate with Harry Dent's coming up. Now, I've interviewed Harry on this channel before, and he's very much on the deflation side. Basically says that gold will probably go down rather than up. You know his arguments. I'm obviously fascinated by this inflation debate, because it really is quite fundamental, isn't it, in terms of how you think about asset allocations and where you actually make investment decisions.
Yeah, and Harry and I have been arguing about this for quite some time. And obviously the price of gold continues to rise, despite Harry's belief that it's going to crash. But, Harry and I agree that we have a massive bubble, and that the problem is, too much debt inspired by the Fed. And the way Harry sees this resolving is with everything crashing down and the dollar going way up. And to me, that makes no sense, because I know that the Fed is going to keep printing dollars to try to prevent asset prices from crashing. I mean, that's what they've always done, and they're going to keep doing that. And there's nothing to stop them from doing that. And so I think that Harry's got it wrong. I do think that you're going to see a massive deflation of the asset bubbles, but not in terms of US currency, in terms of real money. So if you want to think about gold, yes, the price of stocks and real estate and everything else are going to come crashing down in terms of gold, but not in terms of paper money, because paper money will lose value even faster than those assets, because assets have some value. Even if they're overpriced, there is still some fundamental value behind these assets. There's no fundamental value at all behind paper money. Paper money can go to zero because that's the intrinsic value. But property isn't going to go to zero. It's worth something. A lot of these stocks, they're viable businesses. They're not going to be worth nothing. I do think they'll be worth less in terms of gold than they're worth now, but they could be worth a lot more in terms of paper, because it's all relative. Yes, asset prices can go down, but if paper money value goes down even faster, well, then in terms of the paper money, the assets are going up. So Harry, I think, is just looking at the wrong thing. He looks back at the 1930s and expects a similar, movement. But Harry forgets that during the 1930s, we were on a gold standard. The dollar was backed by gold. So when the dollar gained value, it was because we were still on a gold standard. And so prices went down during the Great Depression in terms of dollars because the dollar was gold. It's not gold anymore. It's just a piece of paper. This is not the 1930s, and we're just going to keep on printing. So the real crisis is going to be a currency crisis, because the Federal Reserve is going to keep printing money to prop up assets and prop up the U.S. government until the dollar crashes, because that's the only thing that's going to put a stop to all the money printing and the spending. So we're headed for a U.S. dollar crisis, and we're headed for a sovereign debt crisis. Harry is hiding out in U.S. treasuries. As far as I'm concerned, that's the epicenter of the explosion. I want to be as far away from U.S. treasuries as possible. And I think the opposite of the dollar is now gold, right? Gold is the epitome of fiat, and gold is real money. And so that's what's competing. And I think gold is going to win, not the U.S. dollar. And so I feel bad for people that are following Harry's advice, because they're right to be worried and see a crisis coming, but they're wrong in thinking that they're going to have refuge in the U.S. dollar. They're going to lose even more money there than if they stayed in the U.S. stock market. But I think they would do even better if they followed my advice to get out of U.S. stocks and bonds completely, go to international equities, value stocks, dividend-paying stocks, mining stocks, commodities, raw materials, things like that. I think I'm building the portfolio that is going to not only survive the crisis, but thrive. I think people following Harry's advice are going to get wiped out.
Well, you and Harry will be debating on the 20th of November. I'll put a link below. People can go across and sign up for that. I think it'll be a fascinating debate. It is really, I think, the epicenter of the discussion, right? Inflation, deflation, what do you do? And it's important, I think, that people make their own decisions based on the best available information. So
absolutely,
yeah.
Absolutely.
Peter, I really appreciate your time today. It's been a fascinating conversation. Just one last question for you. In terms of time frame, how long do you think it's going to take for this all to play out? Are you thinking, a few months, a few years, or is it impossible to tell?
Well, there is no way to tell because it's already gone on for a lot longer than I thought, 10 years ago, 15 years ago. We've kicked the can down the road for many, many years. But of course, in all the years of can kicking, the problems have gotten much, much worse. Yeah. So I'm far more worried now than I was a decade ago. But since we were able to postpone it this long, obviously, I can't say that we can't do it for a few more years. But, as the bubble gets bigger and bigger, getting more air into it gets harder and harder. And I think COVID came along and really put a gaping hole in a bubble that was already deflating. So that has really advanced the process. So I do think over the next few years, somewhere in there, and it could be, a few months from now, or it could be a little longer, but I think we're reaching the end of the road here. So I wouldn't want to press my luck. I just tell my clients, just assume it's going to happen tomorrow, right? Because we don't know. Just be prepared for it. And then you can sleep soundly knowing that whenever it happens, you're all set.
Yeah, great advice. Peter, thanks for your time. Now, if people want to find out more about you, where's the best place to go?
Well, I do my own podcast, shiftradio.com. You can listen to it anywhere in the world. Also, you can sign up to my new YouTube channel, The Schiff Report. We post my podcasts and other content there. Also, follow me on social media. I tweet a lot. I'm on Facebook. I'm on Instagram. That's one of my newer platforms. So, seek me out there and follow me. And again, if you do have money that you'd like to invest and you want me to manage it for you, whether it's in the mining sector or just, general value dividend paying stocks, we accept accounts from people all around the world, managed accounts that I run with my team. And so, go to our website at europacificfunds.com to get information, and you can contact us and speak with one of my representatives about managing a portfolio for you.
Peter, thanks very much for that. Thanks for your time today. Very important messages there, and appreciate your time.
Take care.